Well, here in Spain, Hanson from Blevins joins me again this week for our financial discussion. We'll be looking at the importance of making sure the investments and savings you own are actually suitable for you. So, Brett, how are you?
Yeah, I'm good, thanks. A week flies by, eh?
It does. Anyway, how important is it for your financial planning that it is personalised for you?
Well, Howard, most people I come across, particularly those who are retired or close to retiring, although they are generally looking for a good return on their wealth, whether this wealth is made up of investments or pensions, they're also seeking much more than this in that they want to establish a strategic plan which is specific to their needs and objectives over the longer term. And as most people's longer term plans tend to differ because of their personal circumstances, their objectives, their attitude to risk, then there's no doubt that their financial plan also needs to be personalised. For example, our clients have varying income requirements dependent upon what other income they have and what are their expenses. Some have come to Spain to relax and live a quieter, modest life. Others want to take the opportunity to travel as much as they can whilst they're still able to, which could mean that they need a higher level of income in the early years, but less in the future. At the same time, Howard, some of our older clients have invested with us over many years and by doing so have managed to accumulate capital, which they now need to access because, for example, they need to pay for additional care costs. Some more than others, depending upon what family they have around them. Again, this differs from person to person. And while some clients tend to be very cautious with regards to investing, others accept greater fluctuations in their capital over the shorter term in order to increase the opportunity for higher returns over the longer term. Then there is succession planning, and whilst most clients want to ensure that should anything happen to them, their spouse, partner or children will inherit their estate with the minimum of complications and taxes, family life can be quite complex these days, involving children from previous marriages and or estranged children. So there's no doubt everyone's situation is different, whether it's their specific income needs, objectives, attitude to risk and family situation. And so their financial plan must also be personal or personalised to them.
When you meet with new clients, do you often find that their investments are not suitable for their circumstances or objectives? What happens if their portfolio is too risky or too cautious?
When I'm meeting clients who are currently living in, say, the UK and are looking to move to Spain, whilst their investments are suitable in the UK, they are often not suitable for Spain with regards to taxation, currency and regulation. For clients who are already living in Spain, they tend to contact me because they have sold an asset and have capital to invest, or have inherited money or have now retired and are in the position to draw down on a pension. Many of these may be investing for the first time in many years. But Howard, I also meet many British expatriates living in Spain who have not been happy with the performance of their investments or pensions, which have been set up by other advisory firms. And I find the unhappiness is largely due to either the investment and or pensions were not set up to meet the client's true objectives or attitude to risk, or they have not received regular reviews, thereby the portfolio of investments have not been rebalanced or taken into account the client's change in circumstances or their change in attitude to risk, or even rebalanced to ensure that it stays in line with their existing attitude to risk. And as a result, too many people have portfolios which are not suitable for them and are unable to meet their specific needs.
So how does someone determine how much investment risk they can take?
Yeah, that's a good question, Howard. For me, this largely depends upon what someone's circumstances are, what are they wanting to achieve, what is their time horizon, and to what extent are they comfortable with the capital value of their investments or pensions fluctuating. At Blevins, we believe in diversification, which means we diversify across different asset classes, geographical locations, and across varying market sectors. But still, it is very important to understand that investments do fluctuate in value if you're seeking a better return than, say, money held in a bank account. And so it's important to establish how much volatility each client is able to accept. And the best way to understand how much volatility you are willing to accept is to obtain an objective assessment of your personal appetite for risk, for example through psychometric analysis, and to have a detailed conversation with an appropriate advisor. Then, once you have your risk profile, you can create a portfolio of assets to match your profile and objectives, incorporating the diversification I've just mentioned.
When buying new investments or reviewing existing ones, what other elements should people take into consideration beside their risk profile?
Well, from my experience, Howard, I would say currency, regulation and taxation, with the latter being on both an ongoing basis and also on death with regards to death duties in both Spain and or the UK. Just touching on each of these, if your income is primarily sourced from sterling pensions or sterling assets and you are living in Spain, you may want to consider investing some of your money in euros in order to reduce your reliance on sterling income. When it comes to regulation, it is important to be advised by a firm who are authorised to provide advice in Spain and who understands the tax and regulation here. Perhaps choose a company who have offices and are regulated in both Spain and the UK so that you can receive cross-border tax advice, and they can also advise you in the UK should you go back to live there in the future. And on taxation, there are some very tax-efficient solutions for here, which can also work if you were to return to live in the UK. And think long and hard about who you want to leave your wealth to. You have no doubt worked very hard to accumulate your wealth. Make sure you leave it to who you want with the minimum of complications and tax.
Finally, Brett, how often do you recommend people review and adjust their savings and investments?
Well, Howard, because circumstances, objectives, tax rules and rates and regulations change frequently, personally I think it is essential to reassess all of these in conjunction with your investments and savings on an annual basis. So all our listeners, please make sure that you do use a firm of advisors who have the ability, capacity and skills to be able to carry out these very important annual reviews.
And the contact details of Blevins Franks?
Yeah, I think if anyone would like to contact us, then the best way to do that is to locate their local Blevins Franks office, and the best way to do that is to go to our website, blevinsfranks.com.
Many thanks, Brett. Always a pleasure.
Thanks, Howard. Take care now.